I'm Charlotte McLeod with the Investing News Network, and here today with me is Shree Kargutkar, Managing Director and Portfolio Manager at Sprott Asset Management. Thank you so much for joining me online today. Great to see you.
Yeah, good to see you as well, Charlotte.
Okay, so before we get started on our 2022 questions, I want to take a quick look back at 2021 and get your thoughts on gold's performance. I wondered if you were surprised to see a more muted gold price last year compared to what we saw in 2021 in 2020 when there was a big rise.
Yeah, we had a very strong year in 2020, and even 2019 was a very strong year as well. If memory serves, gold rose just around 25% in 2020, and it was up almost 19% in 2019. So I kind of suspected that we're due for a consolidation as we entered 2021. However, what surprised me the most was perhaps the about face in investor enthusiasm towards gold, because despite the persistent negative real rates and runaway inflation and increasing deficits all around the world, investors actually cut their bullion allocation in 2021, and gold ETFs, the combined gold ETFs that we track, saw their holdings reduced by almost 9% through 2021. So it was not the fact that gold had a muted price response in 21 because we had such a strong previous 2 years, but it was more the sentiment, which was very poor from the investor community. That's what surprised me the most.
Okay, that's really interesting. And you mentioned rates and inflation. I think one of the key questions that we have for 2022 is whether the Fed will be able to control inflation. This is obviously quite difficult to predict, but can you give me your sense of whether it will be able to fulfill the plans that it's laid out?
So the inflation we're seeing right now seems to go beyond monetary policy, right? We have supply chain bottlenecks. For example, we have ships waiting to unload their cargoes at the ports. We cannot seem to find enough truckers to move the goods around the country. And that's just on the logistics side of things. We obviously have tightness on the commodity side. Everything from orange juice to oil is rising. And we're seeing that demand, the consumer demand, translate to higher prices. And that's what seems to be feeding inflation right now. We'll leave the wage pressures on the side for now. But the Fed, as we know it, they have a dual mandate. They have to ensure that there's maximum employment and that there is also price stability. And right now, we are at an interesting juncture. If the Fed hikes the rates too quickly, the nascent economic expansion will be the casualty. If they hike too slow, we'll likely continue to see inflation be fairly robust as it has been. And I think that the Fed may choose the lesser of two evils, which for now is to ensure that there is continued economic stability. And as a result, my thinking currently is that the Fed will hike, but not with the aggression that is needed to significantly tamp down the inflation that we're seeing right now. And as a result, we will probably see real rates come back under renewed pressure as inflation expectations start to move higher. And the other casualty of that could well be the US dollar. And both of those are quite positive as far as gold is concerned. And I think as a result of the potential Fed action or rather inaction, it probably creates a very good opportunity for gold to move out of its current consolidation and into a new uptrend.
Okay, well, thank you for laying that out. That makes a lot of sense the way you explain it. So as we've said, the Fed, obviously, what it's doing will have an impact on gold as we move forward. What other factors are you looking at for 2022 that you think will influence the yellow metal?
I think the biggest factor, the single biggest factor, will be investor demand. In 2020, we saw gold obviously make the new high, and investor demand for gold in 2020 was at an all-time high. Almost 24 million ounces flowed into gold bullion ETFs. However, in 2020, as a result of COVID, the physical demand out of the two largest buyers of gold, which is China and India, was really nowhere to be found. And that weakness continued all the way into the first half of 2021. But in the second half of 2021, Asian imports surged once again. And I think India had the largest gold import year in the past 6 years in 2021. So I expect to see that demand continue for both India and China heading into 22. And we're starting to see early signs of investors start to come back into gold. We saw one of the largest inflows of gold bullion into the physical ETF just a few days ago. And if this trend were to hold and we have both the investors and the physical buyers rowing in the right direction, like I said before, investors were actually moving away from gold last year when the Asian buyers were coming in. But if you get both the physical buyers buying and the investors coming back into the space, this should create a little bit of magic as far as gold prices are concerned.
Great, and let's take a closer look at what this all means for prices. Do you have a particular range that you think we'll see for gold in 2022?
Well, Charlotte, my crystal ball has gone missing. But there was an interesting thing that we saw in 2021. Despite gold declining on a year-over-year basis last year, the average price of gold in 21 was actually higher than it was in 2020. I expect for gold to do quite well in 2022, and I would not be surprised at all if it were to make a new high this year.
Okay, yeah, obviously very difficult to predict, but thank you for giving that information. Now, moving on, I also want to talk to you about gold stocks because I know you're involved in the Sprott Gold Equity Fund. I want to ask about 2022 and where you're seeing the most opportunity among the companies.
I think there is tremendous opportunity in the precious metal equities today. I've been following this space for well over a dozen years now, and I've never seen anything close to the valuations that we're seeing in the precious metal equities today. The GDM, for example, the GDM index, it trades at a 50% discount to the S&P 500. And in the last couple of weeks, we've had a large correction in the S&P as well as the NASDAQ, and that discount is still as wide as I've seen it. So I think what we're starting to also see, in the precious metal space, is that we're seeing high dividend payouts for certain companies that are producing gold. We're also starting to see buybacks start to happen. So we have valuations, we have buybacks, and we have dividends that are being announced and or increased. Now, within the sector itself, I think the most opportunity, the biggest opportunity right now is in two areas. The first area is the mid-tier and perhaps some small producers as well. So small and mid-tier producers. And the second set of the opportunity within the precious metal space is in the earlier stage exploration companies. There is inflation occurring, unfortunately, as far as mine buildouts are concerned. So some of the developers are probably positioned, I guess, not the best as we'd like to see them. And that could be the one area of weakness that I can think of. So producers are cheap, they're returning capital, they're growing their margins, and they're able to grow within their means. They also have record high margins right now with gold trading near $1,850 per ounce. So that's the one opportunity. And the other one, as I said before, because of the dearth of exploration that has been done over the past decade, really, high impact exploration companies have the potential to create some incredible value for shareholders.
Okay, that all sounds very promising. I think the one thing that I would want to talk a little bit more with you about is the inflation concerns. Like, we know that this is happening in the world, and of course, mining companies are no exception. They're going to have to deal with this. So how much of a concern should that be for investors? What should they maybe be looking at when they're considering making investments in the precious metal stocks?
So the gold and silver mining companies are not being left alone by inflation, right? So like I said before, we are seeing major inflation as it relates to the cost of building a mine. But on the production side, so if you're a producer, yes, there are costs increases, but the cost increases are somewhere in the range of 7 to 13, 14%, depending on the producers in question. But this being said, margins are at or near an all-time high for many of these producers. And most of the companies that we track, they're basing their 2022 production on somewhere around $1,500 or $1,600 gold prices. So there is ample margin for them to be wrong on the inflation front and still be able to generate very substantial margins for their shareholders. And as it relates to the industry as a whole, I'm not overly concerned, with the exception of a few cases that have been hit, that were underprepared, and in certain instances over-leveraged. But as it relates to the industry, I don't really foresee too many companies getting into trouble as a result of cost escalation, especially on the production or exploration front.
Perfect. I think that makes a lot of sense. I want to ask also on the note of the gold companies, are there any trends that you think investors should really pay attention to, things they might be missing too? Because I know people have a tendency to kind of just focus in really on what the price is doing and get stuck with that.
Yeah, I would say the number one focus for us, at least, has been on the cost escalation front. So it is very challenging to be a developer if you're looking to build a big mine these days. Inflation is certainly a trend to be worried about. But the other area that we're also watching closely, and this goes back to some of the comments that I made about supply chain logistics, for companies that are operating in certain parts of the world, especially those with remote operations, supply chain logistics and procurement has never been as important as it is today. And this is as a result of all the issues that we're having on the supply chain side. So that's a trend that we're keeping a very close eye on. And perhaps the last one, and it may or may not be slipping under people's radar, is the increased focus on ESG. So ESG has been a big topic of conversation for many industries, and the precious metal industry is no stranger to this. I would say that most of the companies that we track and that we invest in have generally been fairly good stewards on the ESG front, but they didn't really have a lot of conversations with the shareholders before, and they're starting to do that now. And as investors start to look underneath the surface of some of these higher quality names, they might be pleasantly surprised that these companies are taking care of all the stakeholders, including those that live around them, those that come and work for them, as well as the environment.
Okay, that's very helpful. I think now that we've covered a bit about what's going on in gold, we should head over to silver. So it's often described as a dual metal. It's got its precious side, it's got its industrial side. I wonder which one you think will take the lead for silver in 2022.
So silver demand has always been overwhelmingly tilted towards the industrial side of things, and that's unlikely to change in 2022. However, investor demand is a key determinant, at least in my opinion, for the direction that silver prices take. For example, the silver ETF saw almost 300 million ounces of inflows in 2020. And this $300 million ounce number is important because the annual mine production is roughly around 850 million ounces every year. So that was an outsized move that we saw from the silver ETF front. But in 2021, we actually saw a small outflow out of silver ETFs. And I think part of the weakness for silver in 2021 had to do with that weakened rather investor demand. But this being said, the demand for coins and bars has remained quite robust. So what I think will be the key determinant in 2022 will be the focus that institutional investors as well as large retail investors start to pay towards silver ETFs, and if they're actually allocating money into either the ETFs or the bullion funds or in the physical metal outright. I think that will be the single most important driver as far as silver prices are concerned.
Okay, that's really interesting. I want to ask you a question on the industrial side of demand for silver, because one thing that I've started to hear from people lately is there's some expectation that large companies may want to step into the space, secure their supply of silver, and that could be a big deal for silver. Wanted to get your thoughts on that and if you think that's something that could be possible.
I don't really see it as a near-term risk. We have not seen shortages in silver like what we saw in palladium and nickel just yet in the silver space. So that doesn't mean that if investment demand starts to significantly draw a lot of supply away from the industrial side, that could lead to companies becoming more interested in securing their supply. But this will have to come at a premium to the spot prices, goes without saying. But this is not a near-term risk. This is something that could certainly occur in 2, 3, 4 years' time if investment demand starts to make a strong comeback or even grow beyond what we saw in 2020.
Okay, I think that makes a lot of sense. Now, in terms of the silver price in 2022, usually we hear that the $30 per ounce level is pretty crucial. We couldn't get through it in 2021. Do you think there's a chance this coming year?
Again, my crystal ball has gone missing, so I don't know exactly whether or not we will see a move like that. But I'll give you a little bit of context, right? So silver's at $24 right now. A move in excess of 25% puts it through that $30 level. This may seem like a big move for people who might not be used to keeping a close eye on this space, but silver tends to make large moves on a regular basis because since 2005, we have seen silver have a move of 25% or higher 5 times. 5 times since 2005, you have seen silver make the kind of move that will be necessary for it to break above that $30 barrier. So my thinking is that if gold has a strong year, because if gold has a strong year in every instance, silver tends to do quite well. So if gold has a strong year and we get that resumption up and to the right for the gold tape, it would not be surprising at all for me to see silver trade past $30.
Okay, I think that context is really helpful. And it leads a little bit into the next question, which I think is maybe a fun one. Are you more bullish on gold or silver for 2022?
I'm going to hedge here a bit. And I'm going to say that I'm bullish on both metals, but for different reasons. Gold has been a store of value for thousands of years. And with inflation persisting and economic growth flagging, I cannot help but be bullish on gold as an asset allocator. But as a speculator, I'm just as bullish on silver. It is more volatile than gold, but when gold does well, silver tends to do even better. So if we're talking about price appreciation purely from a percentage price appreciation perspective, I think silver has more upside than gold. But depending on whether you're a speculator or an asset allocator, there's reasons to be bullish on both gold and silver in 23.
Okay, I think that's a very fair answer. And it does kind of go back to the point that people always bring up, which is that people are individuals, right? Each individual investor needs to make their own choices, which as we finish up, I wanted to ask what your best advice is for investors in 2022. Of course, as we keep in mind that, people need to make their own decisions ultimately.
Sure. So I am of the belief that we are in the early innings of a gold and silver bull market. The sentiment towards precious metals and especially precious metal equities is at or near rock bottom. And the opportunities that we continue to uncover is unlike anything that I've seen since I've been involved in the space, which is going back all the way to 2010. Between 2001 and 2011, a little bit of context here, but between 2001 and 2011, gold appreciated by around 400%. But the gold mining index, the Huey index, which is a basket of gold, and it has some silver stocks as well, it appreciated by 1,400% over that course of 10 years. And I think we are on the cusp of a similar type of a generational opportunity today. So I would encourage every single one of your listeners or viewers to maybe dust off their old notebook and do a little research on some of these precious metal companies, especially those that are well managed, well positioned, and are profitable, because they could be the recipe for some significant profits in the coming years. And the same goes for companies that are engaged in high impact exploration.
Okay, I think that's a great note to end on. I do hope that people will take that to heart and start doing some research. Thank you so much for coming on to talk today about what's going on with gold and silver.
It's a pleasure, Charlotte. Glad to be here and happy to be on here.
Yeah, and we'll see you again soon. Once again, I'm Charlotte McLeod, the Investing News Network, and this is Shree Kargutkar with Sprott Asset Management.